Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was very volatile on Wednesday. It all began after comments from US Federal Reserve Board Vice Chair Richard Clarina and also fresh US economic data that initiated the decline for the Australian dollar. Starting with the US dollar bulls returned after comments from the Vice Chairman, a key designer of the central bank's new policy strategy, after rising hopes of tapering in 2021 and therefore was brought back rate hikes of talks, that is, around 2023. That is, if core inflation hits 3% this year. Meanwhile, the US private payroll firm ADP, or Automatic Data Processing, reported that the US employers added a disappointing 330,000 jobs in July, way below the forecast of 689,000. Still this week, we've got tomorrow, the Friday, for the US jobs or the non-farm payrolls for July, with the forecast presently holding around 895,000 jobs in July after a forecast beating of 850 back in June. The unemployment rate is seen at 5.7, where it currently holds at 5.9. So looking at the Australian dollar, a little bit on your guard because we haven't quite broken down yet. The midway point is still holding respectively to support a positive signal for the RSI, which is married up to the MACD. I do feel that although we did get a short stab at 74.26 high on Wednesday, is that we are still looking up towards the top side of the range around 74.25 to 74.45.60. I anticipate that from this region where I've outlined that the bears will come back and may even see a correction from around 74.45.60 down towards 73.45, and only a close under there will initiate a further slide towards 72.85. So in the short term view is that I'm looking for a step up to reject and then sell off down towards that bottom side of the range. Looking at the euro, we can see the market took the challenge up towards that level around 119.10.15 overnight, and from the rejection has put a slight bearish sentiment back in play as the US dollar, which measures the greenback strength against a basket of 6 major currencies, has rebounded to trade roughly around 92.30 as we speak. This has put a slight bearish case due to the rejection and an outside range day, only a weak one, that now looks towards the support of 118.15 or maybe down to 117.50.70 and reassess from there. Any advances I do anticipate will likely fail. The dollar yen rebounds very aggressively and posts a bullish outside range day and therefore puts a slightly twist to the upside. Now, if we look at this pattern here, we can see that the RSI is broken back through the midway point. MACD not quite following up, but nevertheless, we've got two indications to support a positive case, and also with the close above 109.50 has supported this next move up, and therefore looks to a target around 110.20 with a stretch at 110.70.80. What would negate this move is if we see a close under the region of 109.25 to 35. A little bit of a choppy price action for sterling, backs away once again near that 139.75 resistance. Keeping an eye on this RSI, it's not quite broken down for the midway point, but I do anticipate a little bit of a soft play into the Bank of England's rate decision for this Super Thursday. It is assessed that we might see possibly a mixture of hawk and dove in the statement, and that is from the two bias will cause quite a bit of choppiness, and therefore the market will probably mainly end up to a weaker play. Because overall, although we are getting one Fed official talking about tapering back, we do need to see how the Bank of England views, and that is all going to be in the statement. So keep an eye on that this Thursday. Therefore, that would see a little bit of a choppiness since this rebound or this spinning bottom. But any advances, I feel, will probably lack of of momentum, and therefore the drive will eventually ease away from that 152.80 with the firm cap seen around 153.50 and look back towards the bottom side of the range somewhere around 150.70.95. An interesting pattern here as we see a spike to the upside, and some would say this is an inverted hammer, but I would say due to the sideways pattern here, I would like to have seen this inverted hammer down here from where a declining trend. We don't quite have that, do we? So therefore, from the rejection, any advances should still continue. Now, from the 5th consecutive time, the rejection from 1,833 to 35 has clearly been read, and therefore the market is looking for a potential slide due to the RSI breaking down and the momentum also weak on the MACD. The immediate target is around 1,800 figure 2, and if we see a close there, we'll give further scope down towards the region of 1,790 to 1,760 as an objective. So keep an eye on that as this pattern continues to unfold to the bear case, and also with the rejection from last night being the 5th attempt, it does give some concern to the bearish case. Looking at the oil, the market has reached its objective of $68 a barrel and now leaves 66.60 as a target as we see into the European session, a bit of a weaker play. We are getting a little bit oversold, so it's about the best I would probably give this decline and then reassess from around 66.60 to 90 in case we do see a sharp rebound, because we are getting oversold. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report and also be aware of tonight's data releases, as it will cause very much some volatile price action ahead of the non-farm payrolls tomorrow.